Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla and let's go over the market and figure out what happened to close off this week, the first day of September. Not starting off on a very good note, but all that being said, of course, let's jump into it. If you enjoyed, don't forget to hit that like button. This is not financial advice. I am not a financial advisor. And of course, my membership section on YouTube is live. The link is down below. If you're interested, definitely check it out. $3 a month where you get my intraday thoughts on Tesla as the stock is moving and whatnot. Unfortunately, yesterday's video was a glitch. I don't know what happened to my mic. It just stopped working. But unfortunately, pretty much the main thing I was going to say was what I already told my members yesterday so that they were prepared. I'm trying to scroll down to where I said it. Why is it scrolling so slowly? I think it was this one here where we're showing a slight bearish divergence on the RSI and the MACD is softening up. Nothing major, right? But, it was definitely showing a bit of a softening, which you can see on the 65-minute chart over here, right? Is essentially what I was telling my members. You can see as we're kind of heading up, the RSI was heading down and the MACD also started crossing bearish, which is essentially what I told them. And that's unfortunately what we got today to play out, right? We got a pretty decent crash today, right? Closing down at some point we were down about almost 6.5% to 7%, but still closing down about 5% at $245 essentially per share, which compared to the market is obviously a pretty significant underperformance, right? And this comes off of a massive news that came out last night, if you're following, where the positive is the fact that, I guess technically they're all positive depending on how you want to look at it, but we have the Highland Model 3 or the Model 3 refresh, which came out, which looks phenomenal. I'm actually considering it. I'm not gonna lie, swapping mine out for that, but that came out, which looks beautiful. But I think that's positive. But the thing that made Tesla most likely drop are the two catalysts of the Model S and X being cut in price of about 20%, which is pretty significant. Now, obviously, S and X is a pretty small percentage of Tesla's overall, unit of sales or volume of sales of overall cars, right? Obviously, Y is by far the highest, followed by 3, and then obviously a mix of S and X. But nonetheless, that is still a pretty massive price cut by 30%. And on top of that, of course, FSD did go down by about 5K, I believe, or something like that, or 3K. Essentially, the price of FSD went down as well, which again, all those combined together, price lower equals less margin equals less profit and revenue and whatnot. And the market doesn't like that. So that's most likely what drove today's, sell-off, right? But on top of that, let's talk about it, I guess. Let's figure out if this is really bad, right? So the first thing to note is the fact that there's a lot of lines, right? But, hopefully you can ignore these lines for now. And the main thing you want to look at is, of course, these blue ones right here, the blue line, the ascending channel that we were in. We did break, unfortunately, down from it, right? Which, of course, isn't really a good sign. I was hoping that we would come back down to it, but then get one more bounce, but we actually just broke right through it. Straight down, which isn't ideal. So that's not good. But the good thing and the good news here is the fact that it's not super unexpected, right? I did talk about how I personally, wouldn't be surprised if we get a bit of a cool off, especially in September, a bad month. I've been talking about this for probably 2 weeks now. So hopefully people aren't too surprised by this, but it is a pretty, bad month for the market and for Tesla. And we're already down to the level I thought we will go down to throughout the course of the month. We went down in a single day. So sometimes Tesla just does these kind of things. But nonetheless, we did get smacked down by the 50-day moving average and we came right back over to the 21 EMA and we actually closed pretty much right at it, which isn't a bad sign, right? We did go below it, but we did close right above it, just barely. So it's, definitely a little bit on thin ice, but closing above it is great. Now, the other thing that's overall pretty good here for the bulls so far, at least, it's potentially promising, is the fact that we are bouncing off that very low 240s, right? As I'm sure by now you guys should know if you're following this channel, 240s is an extremely, specifically 240 to 242, very crucial, super duper duper important level for Tesla to hold, right? Mainly because we had a beautiful bounce off of it over here, right? And then, it had a bit of a support here, beautiful bounce here. And then of course it acted as a beautiful support here for a while, it held for a little bit before, of course, we unfortunately did crash down, and that's what happened, right? You can see the second we crashed below this level, this candle barely hanging on, but unfortunately we had a gap down, and then we had that massive sell-off. But this is what happens when you break such a crucial support, right? We had you have to follow a pretty substantial, massive sell-off, right? And that's why this level is really important. And then we came back up to it, and we got rejected by it several times right around here, right? As high as 238.5 to about that 240 level or so. Constant rejection until we finally went up past it on this massive green candle. And now we're doing what I said not too long ago, right? Where we're just pretty much retesting the area we just broke out of, which is very common, right? It's not unusual. It's not surprising. It's just kind of how the market works usually, right? Sometimes it happens faster than other times. Sometimes it's slower, but usually more often than not, maybe 8 out of 10 times, honestly, you usually retest a breakdown or a breakout. In this case, of course, a breakout of this overall area, right? So that's number one, right? This could be just all that is, right? Just a nice, beautiful retest so far. closing above the 21 EMA, which is great. Now, on the flip side, for the bearish side, if we do go below the 21 EMA, let's say on Tuesday, because Monday, I believe the market is closed, and especially if we lose the 240s once again to as low as maybe even like 239 roughly, which is where we got, a lot of rejection over here, that's when I think we'll come down over to this 225-ish level, which is where the 100-day moving average is, which in my opinion is still actually overall fine. However, if we start losing the 100-day moving average, and we especially on the daily or the weekly start falling out of this overall massive ascending channel, well, that's when things can start getting very ugly. Obviously, it's too soon to say for sure. No one knows if it'll happen or not. But if it does happen, the mid 100s is most likely an area we will come down to almost unquestionably, right? Maybe like 180 at least. Wouldn't be surprised if we come down to somewhere around the 160s though. That would not shock me whatsoever. It would be pretty ugly, and it would be a pretty bad September and October. But that's of course assuming we fall out of this ascending wedge, which so far is not really showing any obvious signs of happening. But it is something you want to be paying attention to, right? Because on the weekly, I've mentioned many times, this still can, in theory, just be a massive bear flag, which would be pretty bearish, obviously, as the name suggests, right? So keep that in mind. Now, on the daily, one thing to note is the fact that the RSI is actually not looking too bad, right? Obviously pointing straight down off of today's move because it was a pretty hideous move. But overall, the RSI is looking decently healthy. Honestly, it's not looking too bad for the bulls. The MACD is still looking overall bullish. Obviously, it's softening up a little bit here on such a red day, but overall still looking pretty decent. Honestly, it's still looking quite bullish. Definitely more bullish than bearish, unquestionably. The 65-minute chart, we had that softening, we had that RSI bearish divergence, which is now, of course, playing out, which is why I wouldn't be surprised if we come up, retest potentially this breakdown that we just had, right, which will bring us somewhere to around the 250s, maybe low 250s, and then potentially come back down one more time to this level, maybe hopefully set up a bullish divergence on the RSI and the 65-minute chart as the MACD starts to finally cross into slightly more bullish territory, hopefully, all right, which might take about a week or so. I think from there, if that happens, there's a chance that we get a beautiful bounce from there. But that's, of course, just an assumption for now. We'll obviously take it day by day and, see how it develops, right? That's obviously something that you want to make sure that's important to do. Now, on the flip side, we talked about the daily being kind of bullish, right? Looking pretty good on those indicators. The weekly RSI looks okay. Looks perfectly normal. I wouldn't say it's necessarily bullish, but I definitely wouldn't say it's bearish. On the flip side, the MACD has slightly flipped bearish. You can see the red bars. You can see the green line did cross below the red line. So definitely some bearishness coming in over there. It's not ridiculously convincing yet, but it's definitely flipping a little bit more bearish. But then on the flip side of that, the monthly is looking like it wants to do the opposite of the weekly, right? Where you can see on the MACD, it's starting to look like the red lines are coming to an end, the little bars here. And you can see the green is about to cross the red. It's like pretty much overlapping, arguably even crossing as of right now. So there's a lot of contradicting factors here, right? So it's a difficult area to tread through, right? It's very difficult because, in all honesty, I know people like to meme on technical analysis a lot, but this is one of those scenarios where it can definitely go up or down. It's just a matter of where, right? It's just a matter of which level gets broken first, right? Again, if we lose this 240, then we go to the 100-day moving average. If we lose that, and especially we lose this overall ascending wedge, which right now is somewhere around the 215s to 220s, something like that, it's looking pretty bad. It's not looking great. And that's where I think the bearish side will start to win. But if we don't really lose too many of these major levels, and especially if we start holding like the 240, or if we come down to this 100-day moving average where we get a beautiful bounce off of it or something like that, right? It's looking pretty damn good. And I think the bulls are definitely in control there. It's kind of like the bulls game to lose, if that makes sense, right? As long as the bulls don't fumble it here, I think there's a decent chance that Tesla gets a beautiful rally coming over to the next towards the end of the year. I do think September, potentially October, are going to be a little bit bearish, a little bit sideways to slightly downwards action as we saw today. I'm surprised it went this aggressively today though, but it did. But I think if we can get past them without too much damage, I think we're in for a beautiful end of the month, especially on November. Now, the volume by price, let's once again talk about it, right? We did unfortunately come over to the slightly less volume, but the volume is still pretty okay here. And we actually are arguably closing very close to this overall higher volume up here as well. So there's definitely still potential that it's not that bad, right? This is still savable, if that makes sense, right? Before this really gets ugly, which is why we really don't want to be losing 240, because we start entering that much thinner volume. And that's where we'll definitely be on our way down to this overall level of the 100-day moving average. So ideally, we want to make sure we're holding that. We also have a potential buy order block on the daily sitting right around the 233s. If you go to the 65-minute chart, you can see not that many buy order blocks, right? A bunch of sell order blocks, which is exactly where we rejected all the way up here. And we have another sell order block sitting all the way up in that 267 to 52.70 level. That's the dreaded level I've been talking about. Probably the most important level for the bulls and the bears overall that I've mentioned many times in my videos, right? So hopefully I don't need to repeat that again, but that is the Fibonacci level I am personally looking at to see if this downtrend post earnings is finished or not, right? Very important, very crucial level in my personal opinion and in my eyes. Taking a look at the squeeze, you can see we are actually not really showing a squeeze here still, so it's not looking too shabby, right? And we are actually showing a little bit of a potential bullish sign here. You can see the bars at the top are showing that the momentum is starting to potentially flip to the bullish side. Whenever the bars, you can see, move up to the top side. Not always, of course, but usually, for instance, right here, we had a beautiful rally. The bar started, showed that squeeze, showing that blue sign. And then we, of course, had a massive rally. And the flip side here, we had the red little circles showing a potential squeeze, a lot of contraction, right? A lot of price ready to explode. And of course, we started seeing these orange bars to the downside. And that's where that suggested that, we talked about it. You can go back to these timestamps in these videos and end of July. We talked about this exactly. But, the bars, of course, indicating that the potential for it to be to the downside for this pressure to explode. It was looking a lot more likely because of that. Now, of course, we're getting not the exact opposite because there is no squeeze indicator with the circles, but nonetheless, it is showing some potential bullish reversals potentially on the horizon over here as well, which is very possible because we did hold the 240, which is very important for the bulls to do. Next thing we'll look at to finally end off this video is going to be option flow as per usual. Let's go ahead and increase the premium a little bit here, and you can see pretty mixed, honestly, pretty mixed. We have I think slightly more bullishness than bearishness, but definitely a good amount of red circles and green circles over here for slightly shorter term bullishness and bearishness, right? Pretty much, end of September roughly, which is, interesting to note. But as we move out a little bit farther out, we have a little bit more bullishness, right? For instance, December of 2025, some nice bullishness here. We have January 2024, some bullishness here as well, right? But ultimately, definitely slightly more bullish than bearish, but it's not really showing a very obvious direction in one way or the other, at least for the shorter term, for the next month or so for September, maybe even a bit of October. It's not really showing anything too obvious just yet. But if I had to pick a direction, it does look a bit more bullish than bearish. But that's kind of the main thing to look at right now. I'll remove some of these lines before I look at the Bollinger Bands because there's too many lines here. Let's go ahead and remove that. Put up the Bollinger Band. And you can see it did expand a little bit here, and it's probably going to look, in my opinion, I wouldn't be surprised if September, maybe even a bit of October, we ultimately have slightly potentially more pain, but ultimately somewhat of a consolidation month, right? Some consolidation, nothing too exciting, nothing too crazy. Get the new buyers to step in, get the consolidation. The Bollinger Bands will slowly start to contract, and I think that hopefully will create the next kind of stage, if you will, for the next movement to the upside, which I think is on its way. I just think it'll take some time personally. I do think it'll take probably about a month or so. But with that being said, that's pretty much what I am seeing. Again, let me know what you think down below, ladies and gentlemen. But thank you all so much for watching. If you enjoyed, don't forget to hit that like button, and I'll see you on Tuesday. Peace.